Hope you're doing fine. Hope you're doing wonderful. I hope you are discoing all night long. How you guys doing? I hope you're doing fine. I hope you're doing wonderful. I hope you're discoing. Please, before I start, like if you like and comment. Like if you like and comment, please, so that I'll go circulate this video. This is a presentation for the dollar, 10-year yield, euro, put to call, the VIX, the equity market, and GDX. Good deal. I start with the UUP, the ETF for dollar bull. Definitely we're in breakout mode. Definitely we're extremely bullish. We found a bottom at the 127 Fibonacci extension right here, ABC, which usually provides a bounce, and a bounce it did, and we did a beautiful impulsive move to the upside, and we corrected sideways, and we are extremely likely we're gonna take Fib 7th high, and our stochastic is in embedded mode. It's when the two lines go over 80 for over 3 days. It's definitely very strong, and it's hooking up. In addition to that, we are in a bullish disco combo, RSI over 50, bullish MACD, and this is extremely bullish. And usually in the past, when you miss the 30 level in RSI, you go beyond 50, and that's what we did. And I'm expecting the rally to continue. And it's there's nothing bearish about this picture at all. Usually, when you break out with this pattern, usually have the top of the pattern as a measured move. So if we're talking about testing the high, it's possible, the high of November. It's possible, but I'm not gonna bet on it. But I know for sure for now we're in extremely bullish mode. Breakout, bullish disco combo. Everything is up as far as the indicators are concerned, and this is the weekly time frame. We are by next week we're gonna be over 20 in the stochastic, and every time you go over 20, it doesn't stop right there. You would at least have a week to a couple of weeks of rallies. Usually you go all the way up, with a few exceptions like we had here in September 2020, and very few exceptions for the last 20 years. So we, even if we assume a bounce similar to this one right here, we had 2 weeks rally after that. So the minimum is 2 weeks rally. The average is multi-weeks rally. So you don't bet on the dollar for at least the next 2 weeks according to the stochastic, okay? Maybe more, okay? So let's talk about the Euro USD. It's the same thing. Usually every time you go below 80 in the stochastic in a weekly time frame for the Euro USD, a sell-off takes place, and this happens 100% of the time, all the time. So the Euro USD is telling me that, okay? Plus, we had rejection from an important price memory, and we had a follow through the week after that, and usually this marks a corrective top. Capisce? Good deal. So I talked about the Euro USD, the dollar bull UUP. Let me talk about the 10-year yield, which affects a lot of things, including technology. Alrighty. We did break out also in the 10-year yield, and we closed the week in a very high yield, 3.74, and we had a bullish crossover between the 10 and 20, and also a bullish disco combo right here, with an extremely high reading in stochastic, which means usually the buyers, oh, in this case, the sellers, are going to be stepping in for sometimes, and yield will go up, bond prices will go down. Last time this happened, similar situation, we had at least a week rally, and before that we had a rally between August 12th and the rally ended in September 28th, so at least a month, and a lot of havoc took place in the market and in gold and silver. So even the 10-year yield is showing strength. So I'm not trying to be a contrarian here, I'm just talking about the chart. Okay, so in the weekly time frame, in the yield, 10-year yield, we had a breakout like what we showed, beautiful breakout. Also we had a stochastic over 20 and a high reading in the RSI over 50, and usually this is a combination of higher yields. Unfortunately for the market, it happened here. It didn't last at that time. 27th of Jan till August 10th, 2020. But at that time, the RSI was not over 50. It was below 50. Here it is over 50. Good deal. Capiche? So that's the difference right here. It's extremely likely that we're going to have high yield according to the weekly time frame for the 10-year yield, and this would be very bearish in the market. So I'm not trying to be contrarian. If you understand this logic in the stochastic and history repeat itself in the daily and weekly time frame, you would understand what I'm talking about. You would understand that I'm not trying to say bad things about the Fed and all that thing. You know, I don't want to enforce my belief in the market, on the market, sorry. But it's technically based, and if you understand my logic, you know I'm not being contrarian. I'm just following these signals. So I talked about the UUP, talked about the Euro USD in the daily weekly, UUP daily weekly, and the 10-year yield daily weekly. Let me talk about the equity put to call, and it's going to be updated tomorrow, but most likely what I'm talking about is not going to change because I'm talking about the MACD, daily MACD for the equity put to market, the equity put to call. If you notice, every time you have this open mouth equity put to call MACD like that, a retracement in the market takes place. This happens 100% in the past. So if you go along in the market, according to these findings, the probabilities are really high that you're not going to make money in the next 2 days at least, according to what I'm talking about. And if you make money, more power to you, but the chart did not give me that signal. If you don't believe in the charts, it is your problem. So I talked about the equity put to call, the MACD for the daily, and the weekly is still negative. But we're talking about the daily here, and it's extremely obvious. So I talked about UUP, daily, weekly, Euro USD, daily, weekly, 10-year yield, daily, weekly, equity put to call, daily and weekly is positive, but the daily is negative for the market. And because it's really it fluctuates a lot, the weekly you could get a sell signal in the market next week for the equity put to call. It's really it goes up and down, up and down, up and down. But this sell signal is for a couple of days for the market. Okay, the VIX reversed today, but okay, reversed today as far as as far as the Japanese candles are concerned, but it's not a total reversal. We still have a bullish disco combo, extremely reliable in the past. When you have this disco combo, a price expansion to the upside for the VIX and retracement for the market. This happened 100% of the time in the past since the 2018, especially if you have a positive divergence with the stochastic. And this positive divergence went all the way back to November till last low, and also from Jan till last low. So positive divergence all the way, RSI over 50, and it's staying over 50 till now, which means havoc. Usually when you stay that long over 50, bad things happen for the market, good things happen for the VIX. Bad things happen to the market, but good things happen with the VIX, so on and so forth. So I'm bullish in the VIX, not because I'm contrarian, because of these sell signals. So we have this breakout, we have rejection, we might retrace, but it's not, doesn't mean that the signal is invalidated. It's still valid. So this is the daily time frame for the VIX. The weekly time frame, it's not always all there. It's 17 reading. If we go over 20 next week, usually this means an extreme sell signal. And also in the weekly, we have the breakout, obvious right here. And usually this works most of the times. I have it here if I'm looking for it. It will be, look. So even the weekly time frame, you have that thing. So it's a breakout, still a breakout, but we did not do the bearish or bullish disco combo for the VIX from the weekly time frame. This is the MACD only, the VIX. Every time you have the VIX with this type of MACD, something bad happen in the market. This is 100% of the time, and it doesn't look like this will change anytime soon. It looks like it's going closer to the zero line, which makes it even worse for the market, good for the VIX. So the VIX is still giving that sell signal. As I said, if you put this in the bottom of the Dow Industrial, you can see the inverse relationship between the MACD crossover. If you have bullish MACD in the VIX, you have bearishness in the Dow, and vice versa. So you had a beautiful rally in Jan 11th, 2023, and you have here a bearish MACD, and you had an indecisive move in December till that time, and you have a bullish MACD here, bearish MACD in October 17th, and you have a beautiful rally in the Dow and the equity market as a whole. Okay, so it is based on something good. So let's talk about the Dow Industrial. The Dow is going nowhere. It's been going nowhere since December. So what happened, you definitely have lack of liquidity, and a lot of the fund managers rotated from the Dow to the Qs or the big techs and the big S&P. That's why the Dow did not make higher high, but the other indices did. And now they rotating back to the Dow, which is not a good sign. That means a lack of liquidity. A lot of fund managers are selling tech and going back to the blue chips, which is not a good indication of a good rally. Now the Dow is outperforming everything, and that's not a healthy rally. You want the Nasdaq to outperform. You want the Russell 2000 to outperform everything. Then the Nasdaq, then S&P, then at the last one is the Dow Industrial, but now it's not. And not only that, we had the bearish disco combo, which proved itself in the past all that time. So you have this bearish disco combo, bad things happen. You had bearish disco combo, you have this happen. You have bearish disco combo, you have this happen. You have bullish disco combo, you have this happen. So it's not, I'm not being contrarian. It's self-explanatory right here. It's easy. Usually the easy stuff makes you the best money. Okay? So even if you don't understand the charts, you could see the pattern. So we are in bearish mode here, even though we went that much today. And let's look at the weekly time frame for the Dow. Also, you trading water. You have doji back to back. You don't want that when you consolidate at the high. You want that when you consolidate at the low. You have the inverted hammer, then the size of candle, then boom. You have the hammer, boom. You have the shooting star here, and boom. So I'm not being contrarian. I look at the chart, and the chart is telling me to hit the road, Jack. And also, you have a bearish crossover in the stochastic, and you went below 80. It's, firmly like that. And most of the time when you do that, especially after you have another go, then you fail, usually you go down. Okay, so you another time down. Okay, so that's the weekly, and if history repeats itself, the Dow Industrial would go down. So after my video, the Dow Industrial went down for the whole week, 17 basis points. IWM, as I said, the high November 2020. B is the low of December 28th. C is the high of Feb 2nd, and it's 177 Fibonacci extension. Usually this is a terminal move. In the same token, it was an older price memory. It found sellers for sure, 100% found sellers. Not only that, you have a bearish discount combo, a bona fide bearish discount combo that came with extremely negative divergence right here. Not only that, you broke the trend line and you closed below it. Definitely, a trained eye will tell you this is a bearish development. It's not bullish at all for the IWM. And also it's underperforming the Dow. That's not good. For the week, you went down that much. And that's not good. You get leadership from small caps, not like that. And what happened? You have a bearish crossover, but you're still over 80, which is not really that bad, but the price action is bad. You had a bearish Harami in the weekly time frame. Let's see the last time you had a beautiful run in a bearish Harami. Right here in August, that's what happened. Here, you had a bearish Harami, but you had a higher high. Here you have bearish Harami, equal high, then you went down. Definitely a bearish Harami in the weekly or daily, never been a bullish thing. So bearishness is bona fide in the daily time frame for the IWM. In the weekly time frame, it's in the price action. It's very, very obvious. Let me look at GDX. GDX to me is definitely a liquidity benchmark. Definitely. Usually it leads the market most of the times. So what happened in GDX? Let me discuss GDX and discuss SLV as well. Okay. Let me discuss also GLD. All right. Okay, let's talk about GDX at first. So GDX underperform everything. Usually when you have a healthy rally, I usually use GLD Newmont ratio because Newmont is it when it comes to gold miners and gold space. So let's assume I'm talking about GLD GDX ratio. So the higher the ratio is the worse, the lower the ratio is better or the best, which means GDX must outperform GLD and outperform SLV if you have a good rally. But I usually use Newmont because it's the leader. If it lags, it's not a healthy rally. So let's assume we're talking about GDX. So GDX had a breakaway gap right here. Usually this gap doesn't get felt quickly. Sometimes it's cycle high, sometimes for months, sometimes for years. So breakaway gap after the break of the trend line with negative divergence, and you missed that 70 level for the RSI, which is definitely not good. So you don't want that. A breakaway gap with bearish wedge, okay, right here. So talk about that. And also you close below the 50-day moving average, which is never good. Let me put that in. Good deal. That is definitely not good at all. You don't want to do that. You want to be over. If you're really bullish on GDX right now, I don't think you believe in charting at all. You don't believe in cycles. You really are. You have your own narratives. I don't know what you believe in, but you are below the 50-day moving average. You broke down from this bearish wedge with a breakaway gap. It's always worse when you break bearish. A bearish or bullish, it's good when you have a bullish pattern, but in this case, you break this bearish pattern with a breakaway gap, means you would have many gaps to go later on, okay? So you have a bearish disco combo, stochastic below 20, and RSI below 50. Once you hit that below 20, the price destruction is fast and furious, and it's always not wise to buy anything while the stochastic right here. Usually people sell the rally. I think today it went all the way up to 70 basis points for the GDX, that went back down. Let's see, last time you had a breakaway gap in GDX. It was right here in April 22nd, and you had this gap. You had this gap unfilled, and you had other gaps until the exhaustion gap right here, and it was filled. And now we filled that gap. See, we filled the last gap, but we did not fill this gap. So we're definitely in breakdown mode in GDX, in pattern analysis, in indicator analysis, moving average analysis. Bearish disco combo, nothing is beautiful for GDX, which is a benchmark for liquidity along with silver. Same thing you had, breakaway gap, stochastic. So it's the same thing, exactly the same thing. GLD is the same thing too. Breakaway gap, but you filled it here. But you had so many gaps till you reversed, and you had bearish disco combo with multiple bearish divergences in RSI below 50, and most of the rallies will be sold now definitely until you come out of oversold and stochastic over 20. So nothing bullish about it at all. Nothing bullish about gold and the gold space. Nothing bullish about the equity market. Everything is bullish about the dollar, the VIX, the 10-year yield. Please like if you like, share, subscribe, and comment. And do remember, this goes forever!